Welcome back here with the Gold Special, this festive series on money, money, money. We've been discussing the best route via which you can invest in gold over and above all the festive jewelry that you'll buy this season. The question is, are sovereign gold bonds the better route, or should you stick with gold ETFs or perhaps gold funds? Well, we've discussed a whole host of different parameters. Now it's time to talk about tax. And here, Mr. Roongta, do sovereign gold bonds completely win hands down?
Oh, obviously, because the appreciation is free as long as you give it back to the government. Okay. At worst, if you sell it, as long as you give it back to the issuer, there is no
as long
capital.
as you stay invested for the entire period of the bond.
Not necessarily. As long as you stay invested for the period, or you are allowed to give it to the government at the end of, I think, 5 years.
Okay.
Right. So at the end of 5 years, on every interest payment date, you are allowed to give it back to the government.
What about the interest that I'm earning on the gold bond? It's 2.75%.
2.75%.
Is that also tax-free?
That is taxable. That is taxable.
Interest is taxable.
Interest is taxable. Okay. But the appreciation is not, as long as you give it back to the government. If you sell it in the market, however, it is taxable like an ETF. So if you have held it for 3 years, you would get the indexation benefit, and on the balance you would have to pay 20% tax.
Okay.
But that is same as, and if you have held it for less than 3 years, the entire gains are taxable. And we keep assuming, we keep saying gains. That's not always necessary that you will have gains. Remember, gold prices can be volatile. You could also have losses.
Yeah. Okay. So what are your views on taxation, Chirag? Is taxation really skewing decisions in terms of investment, and is that putting ETFs at a disadvantage?
In a mathematical form, yes, of course, because given the sovereign power, they have made it tax-free. But if you see the ease of investing, I think it scores over and above the taxation purpose.
Okay.
And coming to the liquidity part that we were talking about, I think there can be challenges, though I think liquidity over a period of time can come, but there can be serious challenges to it.
Coming back to the point on taxation, so when we're talking about ETFs, if you're going to be selling or trading units in less than 3 years, then you'll have to pay short-term capital gains. So basically, it will be at the rate in which you
marginal
fall.
Tax rate.
Okay. And after 3 years, there's indexation benefit.
Benefit and long-term capital gains at 20%.
At 20%. Okay. So that now brings us down to the final thoughts and questions on this. I know Chirag's favorite pick. I'm guessing it has to be gold ETFs. But what do you think? If you were to advise, looking at the current market situation, the evolution of the product as well, what do you think should one opt for?
So I would say for retail investors, and by retail I mean genuinely retail investors, gold fund remains, because he's not really worried about tax. Okay, I think there the ease of investment that a gold fund represents, and the best way to invest in gold like in equity is through systematic investment that only gold funds offer today. So for retail investors, I would say a gold fund continues, despite the costs, it continues to be top of my list. If you are a large investor, you have no real choice other than to go to gold fund, to gold bonds, to the extent you are allowed to. 500 grams per person per year.
And also keeping in mind that you might not have immediate liquidity. It's not a...
I don't think liquidity will remain a real problem.
Okay.
So I don't think, and for a large investor, I don't think that, because he can get a loan against it.
What about those who are looking at a short-term investment in gold and a long-term investment in gold? So then what instruments should they use?
Don't look at a short-term investment in gold. This is my view.
Okay, Chirag, so final thoughts, and I'm now going to ask you to wear the magician's hat and get out the crystal ball and look forward in the future and give us some sense. It's been a great year for gold, at least the last 12 months. Will that continue?
Yeah, I think short term there could be challenges as the chatter for Fed interest rate hikes goes up for December. And election outcome is going to create uncertainty with the ebb and flow of news that will come. But overall, from a long-term perspective, what's going on, or the macro picture or a macro backdrop that we have, is extremely positive for gold. Given the central banks are hitting the wall, they don't have more options rather than continuing. Either they continue the same policy making, which is erroneous in a way, it's not going to yield results, or something significant happens and that's going to create some sort of crisis for that to change. So in a way, it's going to be a win-win for gold over the medium to long term.
This short-term correction that we've seen last few weeks, is most of it over and done, you think, or will we see better levels, lower levels? And I'm saying because a lot of retail investors would be looking at buying these dips. So should they buy now, or do you think they'll get even better prices?
There could be some downside, but I think it's going to be limited, very, very limited downsides. I don't expect major downsides coming in gold. So any dip that you see could be an excellent opportunity, but don't try to time the market. It's better you get invested into gold and invest for the long term. That's what I agree with her here.
Okay, all right, Chirag and Mr. Roongta, thank you so much for your time. There you have it, all the details of how you need to invest in gold this Diwali. Hope this conversation has been helpful. Do send us your feedback, comments and queries. We'll see you again. The festive series continues on Money, Money, Money.